Good afternoon, everyone. Welcome to today's webinar. This afternoon, we will review important aspects of federal crop insurance and how to ensure a successful claims process in the event of losses related to wildfires and smoke damage. My name is John Aguirre, President of the California Association of Wine Grape Growers. Today's webinar is brought to you by the West Coast Smoke Exposure Task Force. I want to recognize other industry groups represented on the task force: Oregon Wine Board, Oregon Wine Council, Oregon Wine Growers, Washington Wine Growers and Wine Institute. The participation of those groups makes clear the issues addressed today span the spectrum of West Coast wine growing regions. Our key focus for today's webinar is to address lessons learned from previous wildfire events and how growers can prepare themselves to get the most value out of federal crop insurance. To help us understand how crop insurance operates during wildfire smoke events, we have a great lineup of presenters. We will start with two senior leaders from the U.S. Department of Agriculture's Risk Management Agency, referred to as RMA. Jeff Yasui, Regional Director for the RMA in Davis, California, and Ben Thiel, Regional Director for RMA in Spokane, Washington. Both of these gentlemen are complemented by a great staff team, and they do an outstanding job serving the agricultural community. They are focused on making certain crop insurance works effectively for wine grape growers. As Regional Director for RMA, Jeff Yasui is responsible for RMA's insurance services in Arizona, California, Hawaii, Nevada, and Utah. And in Spokane, Ben Thiel's office serves growers in Alaska, Idaho, Oregon, and Washington. In my discussions with Jeff and Ben, it is clear to me RMA has been very conscientious about maintaining flexibility in program policies surrounding wildfire smoke losses. The science around wildfire smoke has far to go to answer the many questions that growers and wineries have about the effects of smoke on grapes and wine quality. And until we have more research and better scientific understanding, there will continue to be a lot of gray areas when it comes to smoke damage and smoke-related losses. Accordingly, some aspects of the crop insurance program are not defined in black and white, and for good reason. Flexibility in how the program operates better ensures growers will be paid for wildfire-related losses. Before I hand it over to Jeff and Ben, I want to encourage you to use the Q&A feature at the bottom of your screen, where you can submit your questions. We may entertain a question or two immediately following Jeff's presentations, but we will intend to save the bulk of the Q&A for after our three industry presenters, when all presenters can participate in the discussion. So it's now my pleasure to have Jeff and Ben appear on screen and start their presentation.
Thank you, John. I will share my screen and see if this goes successfully. There it is. I can't tell if it's gone to presentation mode yet.
You are not yet in presentation mode, Jeff.
Okay, let me try this again.
There you go.
Okay, great. Thank you, everyone. Like John said, I'm Jeff Yasui. I'm with RMA, USDA branch that oversees crop insurance. Ben and I have a relatively short program here. There's a lot of good news, I'm hoping. I at least hope you all see it that way also. So I will begin. I just wanted to start off with the roles of RMA. The Risk Management Agency, we oversee the programs. We provide the regulations, the policies, procedures, guidelines, and more importantly, the actuarial data. We're the ones that do oversight. We're the ones that provide all the numbers to the insurance providers. Your insurance providers, they provide the policies to you and they perform the loss adjustment, which is a key part of their responsibilities, but they also have the policies, and they're responsible for policies and all disputes. And then you have your agents. Those are actually the ones you probably work with the most. They're the ones that sell you the policy, and they're the ones that answer your questions. They really do serve as your main contact. Just a quick overview. Nothing's really changed for 2021. We have the same requirements as last year. We didn't get any more restrictive. We wanted to make sure that we maintain some continuity from last year. There are definitely things that we can improve. We're going to talk about that at the end of the program. But we're going to have another year of familiarity by the loss adjusters and the companies and the agents also. So that will help facilitate losses, hopefully. The process is already in place. And my last bullet is very important. The premium rates did not change from 2020. So we're using the same premium rates for 2021. However, I will mention, I'm going to cover it a little bit later, those premium rates will increase for 2022 as a result of the high losses that were experienced in 2020. This just looks at the fire losses. As you can see, and if you can, the map shows the areas where there were indemnities paid. Sonoma, Napa County are in a bright red or an orange color. That indicates that they had the most of the indemnities. I have a chart on that in a second. But this kind of shows all the wildfire-related losses we've had since 2009. And actually, it goes back a lot further than that. But the first one that kicked it off was one in Washington in 2009. And then we were pretty clean until 14, and then it started getting really bad, as you'll see by another chart I have there. Looking at California, for example, we paid out $227 million in indemnity for fire losses. The total amount of indemnities that we paid overall for grape losses was $268 million. So 85% of the indemnities paid for grapes in California was attributed to fire and smoke taint. The other causes in California was about $22 million of heat related losses. We also have some moisture losses, and there's a few other causes of losses that occurred, but they were nothing compared to the wildfire losses. In Oregon, 55% of the indemnities paid for grapes in 2020 were attributed to fire, and a little bit less than that for Washington is 20%. But in general, looking at, as the little pop-up on the bottom shows, what happened for these wildfire claims, 82% was paid out in indemnity for every dollar of paid premium. So it was a very substantial payout, and it was 82 in Washington, 74 in Oregon, and 49 in California. The participation in 2021 increased in general for a lot of the big grape counties. What I did, I listed the California grape counties in order of liability. So the more liability out there, that's why Napa and Sonoma and Fresno are at the top of the list there because of this, the amount of the liability. But policies increased, acres increased, and liabilities increased pretty substantially. If you look at Napa and Sonoma, Napa went up 53% in liabilities. That's substantial. And so we cover $91 million in liabilities in Napa, and that was in indemnities. We paid out $91 million in indemnities in Napa County for the 2020 wildfires. The liability amount for Napa is $422 million. For the state of California, the total liability for 2021 is $1.74 billion. Huge amount of liability that's covered by crop insurance. The other thing I really wanted to somewhat mention is that we do have our premium figures. It's in the green box under premium information, but a lot of that premium, you're not charged that. A lot of it is subsidized by the government. So we do provide a significant amount of subsidy. So for grapes that I've shown here, 57% of your premium is actually subsidized by the federal government. On the bottom box, the coverage information, I just wanted to show you that more people are increasing coverage every year. And this is the difference from last year. Last year, the average coverage level for 2020 was 65%. It's gone up 2 percentage points. So people are increasing their coverage and they're getting out of the basic catastrophic coverage level. The catastrophic coverage level only covers 50% of your loss. So people are moving up in coverage. They're realizing that I think crop insurance is a good avenue, is a good safety net. Your coverage level can go up all the way up to 85%. So visit with your agent, talk to your agent about your different options. There's also other programs that apply to crop insurance. We have something called supplemental coverage. It's an add-on type insurance amount. And we also have whole farm revenue programs that will cover some revenue losses. So those are the California numbers. And at this point, I want to turn it over to Ben Thiel out of our Spokane office. And I will advance the slides for you, Ben. If I get behind on one, just cue me to go to the next slide.
Okay, thank you, Jeff. So the next couple of slides, I'll talk about the participation in Oregon and Washington. So in Oregon, we took a big jump from 2020 to 2021. Either we're doing a good job of doing outreach, or producers or just finding themselves impacted by loss with more frequency. So they're turning to alternatives to help manage their risk, and crop insurance can do that. So in Oregon, we increased 110 policies to 244. And that translated into a little over 4,000 acre increase and almost $25 million more of liability. When you look at the coverage levels that Jeff cited in his region, Oregon's looking pretty good with low levels of utilization of just CAT coverage. Most producers tend to be buying up coverage with a 5% increase that we're now at 69%. So even though we've made some good ground from last year to this year, we're still only in the low 40% of total insured acres. So there's more work that needs to be done to increase participation, and there has been some progress made. I can't go into details because it's not yet final, but for the next year, being 2022, you could be seeing some changes that hopefully allow producers to get a higher insurance guarantee with more ability to insure grapes at a price closer to the actual value through the utilization of their contract. More is going to be shared about that in the next several weeks as the changes become final. Next slide, Jeff. So for Washington, the picture's a little bit different. We've been kind of stable at around 70% of the total insured acres. We had a slight decrease on the overall amount of acres, but still around that 70%. So I mentioned those changes for Oregon, they'll apply to Washington as well, although likely they're going to have a greater impact in Oregon, I believe. It's not really shown on this slide, but I also wanted to mention for participation, we only offer insurance in select counties, so we don't insure grapes across the state, but there is ability to request insurance for your grapes if you grow in counties that we don't have actual documents for. You can go to an insurance agent and visit with them about the written agreement process. There's several forms of written agreement. One's called an XE written agreement. That's for a county without those actuarial documents. Or if there's a type that's not available, say we offer insurance in a specific county, but there's not a type or practice available, there's another form of written agreement called a TP written agreement. And then there's a third written agreement called a unit agreement by either topographical or irrigation features. Beyond that, there's another thing of interest to point out that insured producers could seek. One is called determined yields for grapes. And this is where insurance is available, but there might be something limiting or you want to enhance what you have. The first form of determined yield is called minimum production. This is where you're not produced an average of at least 2 tons per grape, or 2 tons of grapes per acre in at least one of the 3 most immediate years preceding the current insured crop year. So this is basically, you produce less than 2 tons, but you still want insurance, you can go to your agent and request a minimum production determined yield. Or if you feel like there's been a change in your operation, that you've gone to high density vineyards, or a change in practice, say non-irrigated to irrigated, you can seek a higher yield request. So basically your history is holding you back and you've done something different in your vineyard that would generate higher yields. You can visit with your agent about a higher yield determined yield request. Then there's a third option called high variability yield adjustment. This is where you've had a sequence of years of losses and then it triggers downward trending. And if you get hit with this, there's the option to seek a higher variable yield adjustment. That basically you're identifying that no fault of your own, not a result of cultural practices, or the bearing capacity of your grapes. You've just been hit with a sequence of lost years. You don't want the downward trending to trigger, so you request a high variability yield adjustment. Moving on to the next slide, Jeff. So this slide illustrates what causes of loss result in the most indemnity being paid out. Prior to 2020, losses from fire didn't really exceed other covered weather events. Heat took its toll in California in 2017, and cold, frost freeze, resulting in freeze taint prior to harvest, really impacted Washington in 2019 and 2020. So although our present focus right now and what we've done in the past has been with wildfire smoke, there are other reasons for producers to take crop insurance because it's multi-peril and covers a range of other weather events as indicated in the slide. You see how the red line really stands out in California in 2020, but the blue line for cold in Washington, you can see how that it trended pretty high in 2019 and 2020. Next slide, Jeff. So this slide gives a longer view on loss occurrence for each state and any high loss years, and shows just how bad 2019 and really how bad 2020 were. We were pretty stable for a loss ratio going back to 2001 to present, and then you see those numbers really substantially go up. And what loss ratio is a function of total premium taken in divided by indemnity paid out. Why that's important is that's the actuarial baseline for the entire insurance program, not just grapes, but our entire portfolio of all the crops nationwide. We're mandated to strive for a 1.0 loss ratio, meaning the amount of total premium coming in is equal to the amount of indemnity going out. So with continuous rating, that means we have to rate for losses that have occurred in the past. We have to re-rate for the future. So that can trigger rates to go up or down, as Jeff alluded to in the beginning, that I'll be covering later, that we're likely to see impacts from 2020, probably beginning in 2022, to regain a balance in our loss ratio. Next slide, Jeff. So on this slide, basically a key responsibility of the producer to be covered for a loss under the insurance policy is to provide a notice of loss. Once you file your notice of loss and begin to work with the company and their loss adjuster, you file that notice of loss with the agent. But once you do that, the agent will be out of the claims process. Some things to be mindful of if a loss occurs is, in addition just to providing that notice of loss, is protect the crop from further damage by providing sufficient care. So don't abandon the crop. Again, notify your crop insurance agent within 72 hours of initial discovery of damage, but not later than 15 days after the end of insurance period. Also notify your agent within 3 days of the harvest date of when the date of harvest should have started if the crop will not be harvested. Overall, provide notice at least 15 days prior to the beginning of harvest if the crop was damaged during the growing season. You previously already provided that notice and you intend to claim an indemnity as a result. So I know there's a lot of numbers, it kind of gets jumbled around. Again, the main thing is provide that notice of loss, which then that triggers the connection between you as the insured and the insurance company, who then sends out someone that works for them being the loss adjuster. And so you have this talk with the company and the loss adjuster about, for one, what is the damage triggered from? What is the cause of loss? when did the loss occur, what is sort of the severity of the loss, and at that point in time that you file the notice of loss, what do you intend to do? Is the loss so significant that you intend to further not take care of the crop and you'd like someone to come out and praise the crop? Or are you looking at something has occurred, but you're not yet aware of the significance of the damage? You still may intend to take it to harvest. There's kind of an ongoing communication that begins initially and it goes on throughout the year, because you potentially, as the growing year progresses, you could have additional loss events that occur that you file further notices of loss, identifying maybe in the beginning there's a freeze event, maybe later it gets too hot, and then subsequently near harvest, there's smoke present, so you file a notice of loss. So you're kind of throughout the year, that doesn't abandon your obligation to file those notices of loss, because in the end, you can't be paid a loss if you haven't ever filed that notice of loss. And don't ever destroy the crop without consent from the insured. Even though it was damaged, if you didn't get that written consent from the company to destroy the crop, you could be putting yourself in peril for receiving an indemnity. Next slide. So with smoke taint, there's been a lot of questions asked about the sampling process. Overall, visit with your loss adjuster about the specific information required. Don't commingle or lose the identity of the samples. Preserve the quality of the sample. Overall, our loss standards are rather general for a reason, and that is to allow for a lot of flexibility to address a whole host of variable loss situations. Overall, the loss standards are attempting to make sure that any notice of loss on grapes is confirmed to be for actual physical damage for an insured cause of loss and not from the inability to market grapes, such as a buyer refusing to accept undamaged production. Smoke-affected grapes can't be determined from visual observation, so lab tests are required to substantiate the production has actual physical damage from smoke. So again, do not commingle samples with other units, varieties, or other producers, because the bottom line is you need to maintain the identity of where the fruit or juice came from. And it could also be helpful if you use photos with location identifiers for each sample. If they're in the event with sampling or anything in the loss adjust process, if there's kind of widespread misunderstanding or disparate levels of service between various loss adjusters or insurance companies, kind of in the background, these questions do get elevated from individual or collection of insurance companies to the RMA level to kind of identify, okay, there's confusion amongst the industry. Yes, we provide all that flexibility, but when you see that there's a bottleneck with what's being done, and oftentimes the companies, they're competing on levels of service. So if there's different levels of service and it's very widespread, individual companies will bring that to our attention, but collectively we work with the insurance companies to make sure that when those questions get raised, that they get settled and the information gets disseminated to all the companies. Next slide, Jeff. So with smoke taint, mentioning that insurance only covers for physical damage, which can't be visually observed, so a test has to be done. We don't establish specific threshold levels for the presence of smoke compounds. Lab results support the presence of elevated chemical markers related to smoke. Then as a result of the physical damage, or kind of that's one segment. Then there's another segment on the loss. There's physical damage. It's identified with the lab test with elevated chemical markers. The second part of paying a loss claim is the buyer rejects or reduces the price, citing smoke is the cause of loss. And then there's documentation acceptable to the insurance provider. So just to kind of rehash that, there's sort of two things that in the event of smoke taint, two things that would be required to settle a claim on smoke affected grapes. One is that you have third-party lab results that there is elevated chemical levels of smoke. And the second is that the buyer rejects it for smoke. Another thing I want to note is that tests can be done on grapes or juice and can be done pre-ferment or post-ferment. Again, as long as the identity of where the grapes come from is preserved, such as and is preserved by the individual producer, variety, and the unit. With that, that covers the slides I have to cover. So I'll turn it back over to Jeff to kind of close this out with a few more slides.
Yeah, one of the issues that has been coming up over the years has been, ever since the wildfires, is the unharvested price adjustment. So if your crop is not delivered to a buyer and is left in the field, you will be assessed a reduction in price. And we do that because the price we use to establish your crop insurance price is based on harvest and delivery costs. So there were two ways you could approach this. One, we could say, well, we're not going to have price adjustments. But if we did that, everyone would have a price adjustment automatically built into their the price that we use for crop insurance. So that's why we use unharvested price adjustments. Most of the time, it works. It works really to the benefit of the grower, to the advantage of the grower. Unfortunately, with wildfire, there is a little bit of a problem because growers still incur the cost of dropping bunches. Dropping a bunch, just dropping the bunches into the field does not eliminate the reduction. It's actually keyed on the delivery. So we know that this is a problem, so we are trying to develop ways of addressing drop fruit and those costs. And it's something that RMA, my office, and Ben's office, we're working really hard on trying to figure out, is there a better way of doing this? And I think we're getting closer to an answer, but we're not quite there yet. The timeline with the wildfires, of course, the wildfires in California started 2017 or so, and we started getting some complaints and concerns about the UPAs because the unharvested price adjustment, because it was affecting the indemnity amounts as it's supposed to, but unfortunately, growers are still incurring some costs, such as dropping the bunches to the ground. So at that point, we addressed the concerns and the complaints, and we decided, RMA decided to contract with UC Davis to come up with better cost numbers. Our budget numbers were not that good. They were a little bit outdated. We knew that based on the complaints, and if we're going to come out with new values, we actually needed to go to new cost studies. So we did contract with UCD. For 2021, the cost studies aren't yet delivered, and we did not apply them to 2021. For 2022, we do expect to do some price adjustments. There's some ways of looking at it differently. We've been working with COG and with grape growers and various people to figure out what is a good method of applying the unharvested price adjustments. And one of the ones that we did come down to is, well, maybe we should do it differently by harvest method. And that's something that we're hoping to roll out in 2022. We also don't know when we're going to be applying the cost studies. Obviously we don't have it yet, and it's going to take some analysis to see how that numbers jives with some other information that we've received and to come up with some good values. What I wrote for 2023, additional changes if needed. I don't know what those additional changes would be, but I'm trying to express that it is an evolving process. It is something that we're very open to change. It's something that we recognize is evolving. So hopefully we will get the unharvested price adjustments situated or figured out where it makes even more sense than what we're doing now. The key point, bottom line key point, with the unharvested price adjustment, in order for the reduction to not be applied, the grapes must be harvested and delivered to the buyer. I understand that it says unharvested price adjustment. That's just a word. It really should be undelivered price adjustment, but we don't have that nomenclature, so we call it the unharvested price adjustment. If it isn't delivered to the buyer and growers do something a little bit different, I would have the grower visit with the loss adjuster, see what can and can't be done before you do it. Sometimes it will result in a value being assigned by the insurance provider to the crop, and it goes against your indemnity. So there's a lot of discussion. If you do something that is a little bit different than you've done before with your crop as a result of smoke taint, key thing, visit with the loss adjuster. And the other thing I just want to tell growers, it isn't something that USDA or your insurance providers kind of turn a blind eye to. We don't. We have our requirements to do regulatory compliance reviews, and so these are issues that are being watched. So once again, if it's unusual, visit with your loss adjuster. Okay, for the future, rate changes. I mentioned earlier that will be some rate changes. We expect that the rate changes from the 2020 wildfires will come into play in 2022. And yes, obviously it was a huge loss. California wildfires, $260 million total. We based rates by county and by crop variety, so or by practice. And so, if you're a grower in, I don't know, let's say Fresno County, and you weren't affected by the fires, your rates won't be affected like the ones that were affected by the fire. It does balance out. It is something that has to be done. Obviously, rates do go up. So there will be rate changes. It's probably effective for 2022. Now, that's the bad news. The not as bad news is that we don't apply the full rate changes to a year. We don't exceed. I believe the rule is we don't exceed the premium by 20%, the premium rate by more than 20%. So we do hold it down. So you shouldn't get sticker shock by a huge rate increase, but it is so that 20% will be there to help. Another issue is industry established baselines, or what Ben mentioned, we don't establish baselines or thresholds. We're hoping that the industry comes up with something, then it'd be something that we could adopt, but yet we don't have anything. I believe UC Davis is working on some of these issues, or they're starting to look at numbers. So maybe something's going to come of that into the future. Other improvements of the program. Well, I mentioned the UPA changes and Harvard's price adjustment changes. We might look at quality adjustments differently, make it easier, more consistent. I don't know if that's going to happen, but it's something that we're reviewing. Out of the box ideas that are out there, endorsements perhaps for wildfire. We don't really have one yet, but maybe something could be developed. Or, there's just anything else out there. We are looking for all kinds of ideas that would help improve the program. And then lastly, I do want to mention that if you're a grower and you had a big loss in 2020, your premium rate is going to be the same for 2021. I mentioned that earlier, but you really aren't going to lose coverage. I know there's some articles out there that somewhat imply that you could lose crop insurance coverage. That's not a part of our program. Crop insurance is there for you if you have an insurable crop. We will insure. We're not going to deny that coverage. So hopefully there isn't any confusion about that. We do understand there's limitations perhaps under the property and casualty insurance programs, but not with the crop insurance program. So with that, I wanted to close, and I will stop sharing my screen.
Well, Jeff and Ben, thank you so much. Jeff, I just wanted to make a comment, and both Ben and Jeff, you'd mentioned the baselines issue. I want to just say that industry has been dedicating a lot of time and effort to seek funding for research to help identify those baseline levels of naturally occurring smoke compounds in grapes, which can vary by varietal and possibly also region and also by year. So a lot of different factors there. And I just want to let all of our attendees know there isn't likely to be a single answer anytime soon as to what is an acceptable threshold or not. That will depend on a particular wine program, the flexibility of a winery, and also what kinds of techniques are available to ameliorate modestly or damaged grapes. So no silver bullet there. We've got some good questions. Let me just toss one out before we go to the next set of presenters. Just quickly to clarify, one question that did come in, if a grower has a dispute with a decision by an adjuster, is there an RMA policy around how to appeal that adjuster's decision related to a smoke claim?
Yeah, if there are disputes in the claim, they could go, the grower could go into a disputed claim process with the company, and they would try to work out what the differences are and come to some resolution on that. Also, there's an arbitration process too, that if ultimately they can't come to a conclusion, there is an arbitration process that the grower can undertake with the insurance provider. Ben, I'm sure I missed something, Ben. Is there something else that you can think of there?
You cite the controversial claims. That's kind of real time. I think that's where the loss adjuster kind of identifies it and kind of keeps it open, that there's, throughout the process, there's a disagreement on what they're coming up with and what the insured producer believes is the full extent of the loss. We have someone that's going to be speaking later is a loss adjuster. He might be able to speak more to that, the workings of that process. But as you mentioned, if you refer to the basic provisions of the policy, it would kind of give you sort of the rights if you ultimately in the end dispute not just the loss adjustment, but the overall settlement of a claim, or the lack of indemnity from the claim. You have kind of review rights in the form of arbitration or appeal. But kind of the starting of the process is sort of that controversial claims.
And then, oh, go ahead, Ben.
Oh, I was going to make mention there. An easy answer to one of the questions I see on here is about somebody is questioning that they got insurance for the first time this year and they haven't seen an invoice for paying for that insurance. So if they have insurance this year for 2021 crop year, that invoice they're referring to is paying for their premium. The premium billing date on grapes is August 15th. That's the soonest a premium bill will be generated. So that's why you haven't seen it yet. And this year, because of the drought, one of the forms of drought relief is you have additional time to pay that premium bill this year. You have 60 days interest-free from the date that that premium bill is generated to pay your bill.
Thank you, Ben. And then one final question before the next presenters. This question was submitted early before the start of the webinar. Both of you talked about the importance of maintaining the identity. It was referenced in the presentation of the grapes in order to, if there's a sample pulled, to make that claim. But one thing that we're encouraging, industry groups are encouraging, is growers and wineries to work together to share risk, and that may entail the winery processing fruit, which there's potentially some concern, and making a decision after it's been processed. So if the grapes in the form of wine is later rejected or severely discounted, but fundamentally isn't suitable for the intended original purpose, and there's a loss claim, how can a claim still be filed in that situation?
So there could be a lot of variabilities to that situation, but I would say you're kind of, I guess to boil it down, you're talking about maybe pre-ferment and post-ferment. As long as the integrity of that sample is maintained, to identity preserve that it's from the insured producer, from a specific variety and specific to the unit. As long as that identity is preserved throughout, it could be pre-ferment or it could be post-ferment that you could get, have that test result that indicates those markers for smoke. We're not covering a sensory test, but for the lab test, it can be pre-ferment or post-ferment.
So the wine needs to maintain its discrete identity, or does the associated sample, if I have a micro ferment or a bucket ferment or some smaller unit of that lot, but maybe it's later blended, but I determine one is bad, and I might throw out the rest of the remaining lot, can I still make a claim? I guess the issue here is it once that it's blended, then your ability to file a claim ends?
It really gets down to the integrity of the sample. The sample must have been taken at a time before it was commingled. So if they took the sample and preserved the sample and then it was later processed, but then when they processed the sample and it showed to have the chemical markers in it, or whatever that would taint the wine, then because the sample was maintained, they would be indemnified. There's a lot of situations. It's hard to just give a good general answer, but it does come down to the sample. The sample must be taken before it's been commingled. That's the easiest answer. Yeah.
Okay. Well, so then it's a complicated issue, but the fact that the fruit has been harvested, delivered, and processed doesn't necessarily mean a claim can't be made subsequent to those events occurring. But this requires more discussion and investigation by any grower and winery who wants to file that claim. So,
yeah, because it really comes down to the sample, and then the insurance provider would test the sample, or have the sample what would get tested, and that would determine if those grapes from that unit was tainted or not, and cause the taint.
well, fair enough. Well, gentlemen, thank you so much. You'll be back to participate in Q&A. So we're going to go to our next set of 3 presenters. And I want to say they are all outstanding, extremely knowledgeable in their own right. And they are on the front lines of interacting with the grower community. Our next presenters are extremely knowledgeable about crop insurance, and they all have extensive agricultural experience. And unfortunately, they aren't very well versed in smoke issues, but that's why they're here today. Our presenters are George Harris, agent for Northwest Farm Credit Services Insurance Agency. George operates out of Salem, Oregon. George will be joined in that presentation by Christine Fox, account executive for Pan American Insurance Services, and Christine is based in Fresno, California. And after George and Christine present, they'll be followed by Matt Barr. Matt is field claims manager for NAU Country, a multi-peril crop insurance company, and Matt operates out of Woodland, California. So again, George and Christine will present first, followed by Matt Barr, and then after Matt's presentation, we'll open it up to Q&A. So thank you.
George is going to pull up our slide here. Don't forget to unmute, George. You're good. We're up. Just unmute your line and then we're good.
There we go.
Perfect.
Okay, perfect. Thank you, Christine.
Yep.
I want to thank the task force for kind of taking this on. I remember when it first started up here in Oregon after the Oregon Wine Symposium in 2019. And it's been great to see the traction that it's made and helped bring to light and educate not only growers, but also for bringing in the RMA, educating them as we're all kind of learning as we go through this, because as Ben shared on some of his slides, Ben and Jeff did on the experience. We haven't really experienced this until the last few years, so we're still learning. What I want to cover today is that we want to go into just kind of a quick review of the grape policy. It's going to be kind of a mile high overview, touch base on how your guarantees are developed, what we've experienced as the bad that occurred over the last year and what has happened as a good or the positive results on the crop insurance side. We'll go into explaining a little bit about the quality endorsement, and then kind of turn it over to Matt to kind of go on what it's like to be involved in a claim and working with the adjuster. And what I want to state is that although you're communicating initially with your agent, once we open up the claim, you as the producer are going to be working directly with the adjuster, and us as the agents have to kind of step out of the picture. However, we're able to provide assistance in being able to provide documentation to the adjuster on either production history and et cetera. So the policy itself is an APH policy. It's built off of your production history. And we use a maximum of 10 years of history and at a minimum 4 years of history. And after your average production history is approved, your guarantee is set by what you've elected as a coverage level, which can be as high as 85% on a variety. You can actually place your coverage at different levels depending on the variety or the unit that you have covered. Then if you experience a loss, whether it's a loss in yield or if you have your crop damaged by smoke and file a loss is determined eventually by how much your production falls below that guarantee. Now, with smoke, your production's out there, it's on the vine, but it's been damaged. And so this is where the quality adjustment factor will come in, and Christine will cover that here in a few slides. So how is your policy impacted by a loss? Well, yield adjustment, for instance, this last year down here where we have a number of years that have built your total production, you're reporting your total production each year to your agent, and it builds your history. But what happens when you have a loss, and even though you had the production out there and it went unharvested, but it's filed as a claim, it goes in as a 0. But that doesn't mean that that goose egg is going to remain on your policy. We have tools to be able to do what we call a yield adjustment, and we can use up to 60% of the county's average. And in this case, that yield adjustment is 2.5 ton for this variety. It will vary by variety, and in some cases, in some counties, it will also vary. Yield exclusion gets applied when a county or crop has had a tremendous loss, and then it's usually not announced until like 2 years after the initial loss. And so, for instance, let's say 2018 had been your 0 loss, and we came into 2022 and we looked in the county actuarials and it said, yes, you can apply yield exclusion. We can drop that entire year out of your APH database. And so that helps maintain that average up, which helps your guarantee. How's your, the policy, as I explained, yield adjustment and yield exclusion can impact your premium if you do apply those, but the growers can opt out if they don't want that yield adjustment applied. However, that's going to help your guarantee overall. Remember that there's no penalty for opening a claim. As Ben and Jeff alluded, the rates are set. There's no difference between companies. And as individual losses, you're more impacted on your yield than it is like if it's experience rated, as you might be familiar with your auto insurance or workers' comp. Crop insurance doesn't work that way. The rates are will stay the same. They'll be adjusted from year to year depending on loss history, overall, but the same rate will be applied to you as your neighbor. And as Ben and Jeff alluded, that we'll most likely see in 2022 a rate increase. We won't know what that will be until probably September. So looking over this last year, what was the bad? Well, unfortunately, we're probably going to see the rates increase as we move forward. Again, it's not going to be a huge amount. There'll be possibly periodically increase from year to year. Over the last 5 years, we saw rates declining. So we're just kind of seeing a turnaround. As Ben alluded, that we want to see a loss ratio of about 100%. That's what their target is. Vertically, another problem that we experienced over the claims last year are those operations that are vertically integrated. Let's say a vineyard who has their own winery. These are not separated by entity type. It's in the same entity. And let's say the wine is impacted by smoke, and we know that we can't make necessarily a good Pinot Noir, so we're going to make a rosé out of it, which is a lower valued wine. In that case, you're going to want to work with the adjuster to see if there's any way to be able to adjust that claim based on quality by that reduced value. So when you're coming to that decision of making whether or not you're going to harvest or not, that's something to be asking the adjuster about as you address that situation. And Matt might be able to go into this when he gets to his part. There is unharvested price adjustment that's already been covered by Jeff. Unfortunately, some growers that were initially, this was their first time on dealing with a claim, were kind of unaware of it, but they worked through it. And in some cases, if you harvest and deliver the fruit, that's where you're not going to have that unharvested price adjustment affect you. But if you don't harvest, and let's say you just want to get the fruit off the vine, they're not going to consider that harvested. The good that came out of this were that the labs were overwhelmed. Typically, we would be asking for the samples to be sent off and be tested and make sure that the markers were present in those grapes for the adjuster to start working the claim. But at the time, this last year, the labs got backed up. And so this actually caused some innovation with the companies to be able to work with those samples. So producers were able to take those samples and freeze them. And then at a later date, when the labs weren't so backed up, we could get those samples worked on and get the results. I still think the key thing on this with sampling is that make sure that the samples are taken prior to harvest, make sure they're labeled by the unit number and where they came from in the field, from like block and also row number, and have the variety that's listed on that. And you can just put that in a freezer bag and use a black marker like a Sharpie and write that information on it. Communication is probably the biggest key that we want to have for working with the adjuster. Initially, your communication is going to be with your agent. Make sure that you're notifying them if you even have a gut feeling that you're going to be impacted by smoke. What have we mentioned a few, or Ben mentioned about 15 days prior to harvest. We would like to be able to get out there to the adjuster would like to get out to the vineyard 15 days prior to harvest. But in some cases, the smoke rolled in just a few days prior to harvest. At that time, just make sure that you get on the phone with your adjuster and notify him of your situation. And Jeff alluded to that they are currently looking at the unharvested price adjustment. That is a positive that we see coming down the road. So understand that claims process. For people that just signed up and this is your first year with coverage, I encourage you before you go into harvest that you have a conversation with your agent as you've received either your summary of coverage and go over and understand what your guarantees. The adjuster is going to make that determination of production to count. Matt will kind of go into that, how that's determined. Your indemnity, again, is taking what your guarantees are, taking that production to count times whatever your insured price or per ton. If you're unharvested, just remember that that harvest expense is going to get deducted from your claim. And also your claim may get extended a little bit. If the claim is significant enough, the claim may get reviewed by a second adjuster. And so that will lengthen out that payment. Okay, I'm going to turn this over to Christine, and she's going to go into our next slides and cover a little bit more on APH and also for talking about quality adjustment.
Thanks, George. So far, so good. So obviously you see smoke out there, or you suspect that there's been smoke damage, or maybe you don't know that you've been damaged yet, but there is smoke present. Our advice is to turn in a claim immediately. Maybe you don't know that you're going to have a smoke event impact your grapes, but if it's around you, it's better safe than sorry. As we alluded to earlier in the call, there's no penalty for filing a claim regardless of the outcome. So the worst thing you'll have to do is sign a withdrawal and say, yeah, no, there's no claim for the year. So just make sure you're in touch with your agent as soon as possible if you suspect there could be an issue with regards to any claim. And then as far as the samples go, you have to get those prior to harvest. So that is key, making sure that you've maintained the identity of those samples through the process. And again, keeping your production separate as well. Even if the winery takes it, they need to keep it separate. But making sure that it's gone to a certified lab. Last year with the backup of the labs that were being used, things were broadened a little bit. So talk with your adjuster, make sure you're working with your specific adjuster on what lab can be used and where you're sending your berries so that they meet the requirements of the carrier that you're using and that you're working with. If you guys have a crop that's rejected, you still have to try to market it if you can. If there's any potential buyers out there, you want to try to sell that crop if you're able to. If eventually it is rejected and you're not able to find a home, you've made a few calls, then again, we just continue the claims process and that's fine. But the carriers do want to know that there's been some sort of attempt to try to find a secondary or third home for that. And the key, again, we've pressed it a lot, but just stay in touch with your adjuster. Us as the claims, or us as the agents, we're not allowed to necessarily work the claim with the adjuster. We can't really get ourselves in the picture of it. We can advocate for you, and if you send us a lab test, we can flip it over to the claims adjuster. That's fine. But the communication once a claim starts really needs to be between the grower and the adjuster to make sure you're following that specific carrier's process. Next slide. So we mentioned a lot the word quality adjustment. So as George had said, when you have smoke affected grapes, the production's there. So you've actually produced a crop. Our policy, our grape policy, is based off of production loss. And so when you've got the tonnage out there, the grower then has to understand that a claims adjustment process has to happen to transpose a monetary loss or a loss in value because of this damage into a tonnage loss so that they can calculate how many tons you've lost on the policy. And so this is the calculation to go through that process. And I felt like it was important to talk about this because quality adjustments happening more and more, whereas usually it's just, I had heat or I had frost and now I lost my tons. This is something a little different. So the claims adjuster needs to figure out what the value of your damaged grapes is. So maybe you sold them for a reduced price.
And that's what they're going to take. In some cases, it's going to be a $0 value. So there might not be any value there and you're just going to drop them. But the first step is the claims adjuster is going to find out what the value of those damaged grapes is. And then they're going to compare it to the value of undamaged grapes of the same variety type in the same county. They look at the market price per ton, so what's going on the market currently, and then they also look at what your price per ton is on your insurance policy. That could be one of two things, either the established insurance price that the USDA sets. I saw that in one of the questions. The USDA RMA sets the price per ton each year by variety. So if you've got a contract price, you can actually substitute that in instead, as long as you provide us with your contract price by a certain deadline date. For California, it's May 15th, I believe. For the Pacific Northwest, it's in January. So if you supply a contract, you can actually have that price value put onto your policy. So the claims adjuster is going to look at one of those two factors and pick the lower of the two. So whether it's market price or your insurance price, they're going to pick the lower of the two. And in this case, I highlighted the 2,500 because that was the lower. And so they're going to take what you did receive divided by what you should have received. And then they come up with a percentage. And that percentage is the quality adjustment factor that's going to be applied to your tonnage. So in my math, I've come up with 32% as a quality adjustment factor. If at any point they come up with 75% or greater, they're going to say there's no loss. So the 75%, you have to have more than a 75% loss in value in order for this to start actually being looked at and the claims process to continue. So right here, we've got 32%. Next slide, please. So they take that 32% factor and they actually apply that towards all the tons you did produce. Whether they go out and appraise the crop and look at it and say, okay, there's 250 tons out here that they would have produced, or you've harvested the crop and you actually have weight tickets. Let's just say in this example, you've got 250 tons times 32%, which is your quality adjustment factor. That gives the grower 80 tons for the year. So the policy is going to say, the claims adjuster is going to say, you have 80 tons of production to count for the year. And so that's how they start to do their claims calculation. They've now taken what you've lost in value and transposed that into a tonnage loss, and then they work their calculation out. So I just threw some numbers out, but let's say this grower had a 195 ton guarantee or insured tons through the policy. They only produced the 80 tons, so you subtract that out and you get 115 tons under your insurance policy guarantee. Then you multiply that by your price per ton, which in this case, we had a contract price of $3,500. And so their indemnity was over $400,000 in this example. So keep in mind, if there was a quality adjustment factor that was 0, if you hit next, I think it pops up, George. The little red, yeah. So again, if 0 tons were counted, if it was a 0 value, 0 tons would be counted for the policy, and you would be paid your full 195 ton guarantee on the policy. They wouldn't do a deduction on the tonnage. So just wanted to point that out. In some cases, there will be 0 value. Next slide. So just some important dates in regards to purchasing crop insurance. Oregon and Washington are a little earlier than California. So you'll need to get in there and see your agent early, talk with them early, probably even now if you can. If you don't have coverage, I would start that discussion now. And then here in California, we are January 31st. So you want to probably start talking with us. You know, we can start working on it now, but we don't have rates or any kind of pricing for next year. And then there are other coverage options available. Whole farm revenue protection is a great option if you're looking to ensure yield and market loss. It's not good for every grower, but if you want to have the conversation with an agent and see if it works for you, definitely look into that program. And for Oregon and Washington, they've got a little bit of a later date. It's March 15th, and down here in California, it's February 28th is the deadline to have your paperwork in and ready to go. So again, just contact your agent early so that you can really evaluate your options that are available for you. So we talked a little bit about what you need, and I actually saw in the questions, someone mentioned, do you have to have 4 years? What if you just picked up the winery? 4 years is the minimum, but there are workarounds. So if you only have 1 year maybe, or maybe you don't have any years, there's things we can do to set the policy up without having that minimum production requirement. So just talk with us as an agent. We can use portions of the county's average production to set the policy and get you going for the year. So if you are a new producer and don't have all of those years, that's fine. There are workarounds for that. And then you'll need it by, all of your production will need to be by variety type, because we're insuring by variety. We'll need the year they were planted or grafted, because there are age requirements, spacing, rootstock. Those are some of the things, the number of acres. A map is very helpful in knowing where your location of your vineyard is. And then all the fine details of the policy. So the entity and ownership details, tax ID numbers. We have to gather any ownership of 10% or more of that entity. So just be prepared to provide a lot of information if there are a lot of different interests in your entity. Next slide. I think that's kind of wraps up for us. There were a lot of questions in the chat about crop insurance, so I can hold off, or we can go into that. John, whatever you prefer.
Let's go ahead and have Matt present. And yes, I see a lot of good questions. So let's have Matt present, and then we'll take on those questions.
All right. Thank you.
All right, can you guys see my presentation?
Yep.
Yes, it's up. Thank you.
Perfect. Yes. First off, I just want to say, thank you to COG and the task force for inviting me to come on and speak and present from the carrier side of things from what we did in 2020. And thanks for Christine and George for covering a lot of basic and intro stuff for us. And I can really get into the weeds of what it was like having boots on the ground out there last year. For everybody who doesn't know, my name is Matt Barr. I'm the Northern Claims Manager for California for NAU Crop Insurance. Last year, I spent time not only as a manager, but also as an adjuster out working with many of the growers and spending time in the areas of Napa, Sonoma, and Lake counties, seeing some of the devastation and being involved with the whole process from the time those claims rolled in back in August to, still today, we still have some, a good amount of claims out there. So just wanted to, touch on that first and, really show what we were up against last year. I think this image here that you'll see really just gives a good example of what 2020 was for all of us. Between fires and all the COVID stuff, it was an interesting year and gave us a lot of challenges. For us as the carrier in 2020, we had 1,013 grape claims for all perils. So whether it was for fire, for smoke, drought, frost, freeze, any of those things, we had 1,013 of those. But once we really got into the big fire losses, we dedicated 7 of our adjusters in Northern California to those smoke affected counties, and we brought in adjusters anywhere from Lodi up to Yuba City, if you're familiar with the Northern California area. And we just said, you know what, you're just going to go ahead and get these grape claims paid and work through those. And I think our service really came to bat in those situations. Last year, we paid 694 grape losses. We paid out $106.37 million up to this point. And again, we still have 53 of those open claims from 2020 with about $5.5 million estimated indemnities outstanding. And we're looking at our ledger anywhere from $105 to $108 million in total smoke losses just from our AIP. We did have some, I like to call them learning experiences that stem from 2020. They weren't bad. They were just, I think, learning for everybody. And, one of the biggest ones, which has been covered a couple times here, was the log jam that we had at the labs. And, not knowing at the time whenever we first started the claims process that there wasn't really a huge availability of these labs that could do the smoke compound testing. And we really didn't know what we didn't know. And, it led to a lot of people going to one lab. And next thing we know that, testing is out 3, 6, possibly even, 7, 8 months. One of the nice things was we did have other areas step up, other labs, get new equipment. We found labs in other states, even in other countries that were, they were certified and able to take on some additional testing for us. It really was just a scramble for information and resources for a while. And I think that, the RMA did a good job of loosening up some of those and even stepping in and helping us find those resources to get some of this testing moving forward. Another one of the learning experiences that I came across and other adjusters came across was that there really wasn't an industry standard. And I know they are doing research on that now and trying to get some of those standards set. But we had to look at everything as from an elevated standpoint. And elevated really is an ambiguous term, and it's up for determination. I think if you're making a $20 bottle of wine versus a $200 bottle of wine, your levels of elevated and what's okay is going to be different. And we took the standpoint of if it's more than 0, it's elevated. And we really left it up to the winery partners to set that up for us and to make that determination of, are they going to take a 0.5 parts per billion, or are they going to take a 3 parts per billion? It would just depend on each winery. And then a big one was just the COVID related issues that we ran into. Whether it was not having in-person trainings for our adjusters so we could really hammer down these smoke taint protocols that we had to do, and trying to do everything virtual. And it's just not the same, trying to teach and learn from a virtual standpoint. To our normal claims process is meeting with growers, meeting with field managers, and we weren't able to do that. So we had to really be flexible and take different approaches to how the claims process would go. And there's even things that you just really wouldn't think about, and it's to set ourselves up for success was even things like where are we going to stop and stay the night if we need to spend a couple nights over in Napa. There's some situations where between FEMA being over there, a lot of construction and power companies being over there, it was hard to find a hotel. Even things as be able to get our adjusters a dinner because the restaurants were closed, or you couldn't get in to grab a bite to eat. It's just those kind of things that were stemmed from COVID that just gave us a few issues, and it interrupted normal life for everybody. And I put this on as a learning experience and as a positive, but it was the first claim experience for many growers. It was a learning experience because many had never had a claim before. So it really was a situation for us to go over the who, what, when, where, and why. Explain a little bit more in detail about the policy and what the policy does and how it reacts to different things. What do they need to do to settle the claim? How long is it going to take? Just answering all those questions and really walking them through the entire claims process. And then, we're still kind of the last one we're still hanging on to is there's been a lot of indecision from some of the wineries. Are they going to continue to try to test and treat the wine? What is the quality of the wine after it's been treated? And I know, it is a business decision for them and it affects their livelihood. And I totally understand that. And, we want to give them the leeway to make those decisions and find out what's going to be the best step for them and for the growers. So if we can extend it out and continue to work with them and have open lines of communication, that we're going to, wait for them to make their final decisions. But then we have to look at, okay, there's a lot of limbo here still, especially with, some big dollars still out there waiting. And, we can't do anything on our end until those decisions are made. And it really is unfortunate that, the grower gets kind of stuck of, well, I haven't gotten paid for it. I still can't get an insurance check. Cash flow is up in the air at this point. So those are just a couple of mine and, other adjusters that they really spoke to as our learning experiences for the 2020 smoke taint season. But with all those, we did have a lot of really good positive experiences. I think there was an increase in confidence in crop insurance as a product, and it's viable. I mean, they saw it was proof of concept. and that the program really is very grower friendly. It's here to help them and get to farming to the next year when there is a catastrophic event or even just a loss of production in general. And I think another one we can say is that we really were able to build a lot of relationships in the community. We were over there every day working with many growers, many wineries. Now we've been with many different industry events, whether it's with COG or with another industry association. And really it comes down to the people. I mean, we were able to be someone that someone who had just had a catastrophic event occur, they could lean on us, and really just even sometimes it was just event. Whenever you lose property, when you lose a house, I mean it's not easy. So a lot of these folks could lean on us, talk things through, and to know that we were going to be there for them and try to build it back up with them. A really good positive experience was once we did get those labs in. I mean, it's a pretty quick process. That was really the only holdup was, okay, when are we gonna get those labs back to prove that damage occurred? And once we did get that documentation back, it was quick. It was okay, let's go ahead and get signatures together. We'll build our claim file. We'll get it processed and turned around for a quick payment. We didn't need to hold on to a lot of things, and it really just made for a very good customer service program that if you could get your stuff to me, I can get a check turned around to you. And again, circling back to that first claim experience for a lot of the growers, that we could show them it wasn't a scary process and it wasn't going to take forever. That as soon as we could get that, we could get a claim check to them in just a few days, because it's the way we process checks out of the Woodland office to Napa is only 2 days. And then the last part that is a really good positive experience is just being able to make a lot of these growers whole, or whole as much as we could from the crop standpoint, and really just bridging the gap to 2021. You're never going to get rich farming the insurance product, but it's a risk management tool, and it just sets them up to financially be able to farm in 2021. And knowing that was there, and they could start looking to 2021, really started to help put a lot of this behind them. One of the things that the COG wanted me to talk about was, what are we going to do for next time? One of my first things I told everybody was just let's work closely with your farm managers and your winery partners to have a plan. When there is a smoke event or a local fire, who is going to pull the samples? Where are they pulling them from? Where are you going to send the samples? And then a really good question is, who's going to pay for that? Is the grower paying for that, or is the winery partner going to pay for that if they're pulling them and sending them in? And really just being prepared for this event, because it's I think at this point a foregone conclusion of it's not if it's going to happen again, it's just when. And one of the questions I've seen a lot is what is a good sample? And I think the best thing to do is reach out to the labs ahead of time and find out what they need, and build that in with your contingency plan, and know what it's going to take to have a good sample sent in, whether it's they need 1 cluster, 2 clusters, they need 50 berries, 200 berries, whatever that might be. Or if you're going to micro ferments, how are you going to get that product in to get it sampled? Another great prep for next is, just make sure you keep a really good working relationship with your agent and your assigned adjuster. Keep those lines of communication open, and it's just be that squeaky wheel, and that's how things get turned around. Is what I've always found out is, and if you stay on top of us and you get us what we need, we can get those claims turned around pretty quickly. And then, once you get the documentation in, and I think at this point, everybody's aware of what's needed. And once you get that in, we can turn it around and get you paid. And then, just make sure that the samples, I know George and RMA guys have really talked about, what is an identifiable sample. I always tell people it's 1 sample per variety per location, or if you look at it from a unit standpoint, 1 sample per unit, and make sure that sample is keeping its identity throughout the process. As long as we can determine that sample, that lab test came from that unit, that variety at that location, we're okay with that. So just, stay on top of it. And the best thing you can do in any situation is just document. Keep records, show the chain of custody, and really just stay on top of it. And the faster we get stuff in, the faster we get it turned around to us as the AIP, we are more than happy to set things up for you to get wrapped through that claim process. I just want to say again, thank you everybody for inviting me out. If anybody has questions for me directly, you can reach out at any time. More than happy to answer questions and be a resource, for anybody on this call. If you have additional questions, take my information down, send me an email, give me a call. I'd love to chat.
Well, Matt, thank you very much for that. We're going to now ask all of our presenters to return and address a few questions together. So I'll just give everyone a moment to get back on screen. Okay. So one question that I saw, what happens when there is a mismatch in available data between a grower has a sample result returned that shows that there aren't elevated levels of smoke compounds, but the buyer has made a determination, perhaps based on sensory analysis, perhaps an in-house lab, or some other means, or a different laboratory that the buyer says smoke damage in fact did occur, and the grapes are rejected by that winery and go unharvested, aren't marketable. Is that grower still able to file a crop insurance claim successfully?
I'll take it. The insurance provider needs to have documentation that there was an elevated level. If the lab test comes back not showing it, unfortunately, the grower can still file a claim, but the insurance provider would have to reject the claim because there is no documentation that it was caused by an insurable cause of loss. So hopefully it doesn't happen. I'm not aware of it happening last year. I think most of the tests came back showing smoke taint, but Matt, I don't know if you heard anything different last year, but if that is the circumstance that the lab test shows no chemical markers, they would not be eligible to receive an indemnity.
Correct. That's the same the outlook we had on it, that if you didn't have that hard physical proof from a lab test showing that there was in fact elevated levels, then we wouldn't be able to pay a claim. And at that point, I think it becomes more of a contract negotiation between you and the winery partner of, well, why are they rejecting it if there is no proof? And if they were able to provide if the winery partner was able to provide another test, then we could independently verify that, yes, those grapes did come from that vineyard, then we'd be willing to work with their test as well. But in terms of, not having a test showing positive markers, yeah, we would run into that issue of not able to pay the claim.
Well, thank you. There were a couple questions I've seen on production history, and that had been addressed in the presentations, but I just want to make sure that we really answer the questions out there. One question came from someone who said, well, if I've newly acquired a vineyard and I don't have a good actual production history available to me, how am I going to establish that production figure? And then also it was referenced in another, maybe by you, Christine, I know of growers who had newly planted vineyards. They may have had a loss in the fourth year. They want to insure in the fifth year. Well, their fourth year, insurance rate of production may have been 1.5 tons per acre. But in the fifth year, they expect it to go up to 5 or 6 tons per acre. How do they get from the lower amount to the higher amount? So explore that issue of actual production history a bit more, would you please?
Yeah. So as I had mentioned, we asked for 4 to 10 years of production history to get the policy started. The policy requires 4 years in the production history database, 4 years. And so as an agent, we can take steps to fill in the gaps by using portions of the county average. It just depends on how many years of production the grower is actually able to provide to us. And then from there, we can work with them to fill in the gaps. In the case that you're talking with about, maybe a grower, he's coming into his 4th year where he can be insurable. He's met the requirements. He's got the 2 tons per acre. And then, bam, we get the smoke exposure. Now he has a 0 on the policy again for that year, which again, we talked, it's really 60% of the county's average being used for those years. Typically, for some cases, we can ask for a higher yield, but we can't ask for a higher yield from the RMA for that unit if there was a loss in the most recent year. So for those types of growers, there's not really a good workaround for that. They just still have to stick with that average unless George or Jeff know a different approach to that. But as far as the minimum requirements for 4 years, we can definitely work around that.
Yeah, just to expand on that, Christine, if like the person that picked up the vineyard or purchasing it from another vineyard operator, if that previous vineyard operator had a crop insurance policy in place, we can do a transfer of coverage. And so the same guarantees that applied to that individual's vineyard would then apply to that transfer of coverage. Then when we came up to the new policy, we would be able to transfer that APH database on and continue with the new operator and create a new policy. If there was no policy in place before and it's after sales closing date, the vineyard operator would be unfortunately out of luck to be able to have coverage for this year. He would have to sign up in 2020. If there's no data available, again, we would substitute in county averages.
So midway through the year, if I purchased a vineyard from somebody, let's say I bought a vineyard right now from somebody and they had crop insurance, I could take their current policy and transfer any indemnities to my name. And then next year I can change it and do whatever coverage I want. So if you did just buy a vineyard this year and there was an existing policy, you can take that over. But if you're buying it now and there's no policy now, you can't do anything now. You have to wait till 2022 to get coverage in place. And then we're working with county numbers to determine what your yield's going to be, what the insurable yield will be.
Yep.
Thank you. One questioner asked, is there a cap on the contract price that can be used for your policy?
Yes. I think in California, it's different than in Oregon, Washington. So in California, the cap is 2 times what the established insurance price is. So for example, if we've got a variety type and the established insurance price is $2,500 per ton, and you give me a contract at $6,000 per ton, I cap at $5,000. So I can only go double what the insurance price is for that variety in that county. And then George, I think it's 1.5 for Oregon.
Yeah, it's 1.5 in Oregon of the contract price. That's the maximum. So if we had a $3,000 established price, then of course you could only go to $4,500 on the contract price. If the contract was above it, we would still be capped at $4,500.
I will say for Oregon and Washington, that cap that was mentioned, that 1.5 is under consideration for change for 2022.
I saw a question, someone asked, how is the value of damaged grapes determined for the quality adjustment factor calculation?
Yeah, I saw that question as well. So if you're completely rejected from all markets, you're going to have a 0 value. And then they just they pay you out on your full insurance guarantee and then take any unharvested price out if they need to. If you sell it to bulk or sell it to a winery for a reduced value, they're getting that reduced price per ton and applying that as the value to determine what the loss is going to be. So if I had, a contract for X, but I sold it for half of that because they were damaged, but they still accepted it, they're going to use the half the value as what you did receive divided by what you should have received. So that's where we were saying with the vertically integrated, where you're a winery and a vineyard, maybe you don't have that sale where you sold from your vineyard entity to a winery. That lack of having sales is where the quality adjustment factor kind of gets a little bogged down for those vertically integrated growers. They don't have that proof of sale. They don't have an invoice for a price per ton that they sold it.
Thank you. Well, we're coming towards the end of this session. And, you know, we've really just scratched the surface of the issues and questions that I think people have. And a lot of that owes to the uncertainty around smoke damage. How do you determine damage? What causes it exactly during a smoke event and so on. But I want to give all of our presenters, if you will, just a final opportunity here. Is there a question that hasn't been posed that you want to answer before we wrap this up?
I do have an answer to a question just really quickly from the Q&A. There's a question in there about, you know, the lab testing taking, you know, anywhere from 7 days to, you know, 7 months to get in. Should they turn in a claim to their agent prior to getting the labs and rejections in? And, you know, of course, I'm going to say, you know, get those claims turned in as soon as you suspect there to be damage. Even if you don't have those labs back yet, you know, make us aware of it. Let us know. Let us get a chance to get an adjuster out there, or adjuster to speak with you, so that way they can, you know, that way they help walk you through the process and answer any questions that you might have while we're waiting for those test results to come back. Even if it's not smoke damage, if it's heat, frost, whatever it might be, just turn in a claim as soon as you notice there's damage.
Well, thank you, Matt. Anyone else?
John, I just, with our situation out here on the West, where we've been so dry for so long, I know that growers up here in Oregon, here in the next couple of weeks, will be doing cluster counts, getting an idea of kind of anticipated yields out there. If they look at their guarantees at that point, we would definitely, if you're going to be coming close, you want to go ahead and open a claim right now, because yield weights could be down on clusters due to the dryness that we've been experiencing, especially on those non-irrigated acres that we have mostly up here in Oregon and in the Willamette Valley. So I would encourage growers to definitely keep that in mind as they're doing their cluster counts.
Thank you, George. Well, I want to say one of the COGS staff is out there in wine country, and she reported to me today that she sees and smells smoke. So it's out there. And I bring that up because just because you see smoke or you smell smoke doesn't mean you have smoke damaged grapes. So there's a process here, collecting samples, testing those samples using a variety of mechanisms. Our researchers have said clearly there's a distinction between new, fresh smoke and smoke that's aged and traveled quite a distance. So it can lose its potency. So I just offer that just because I want to say, just because smoke is out there doesn't necessarily mean by any stretch of the imagination that you have smoke damaged grapes. So this continues to be a partnership between growers and wineries to make that evaluation and to document it. So Ben, I saw that you unmuted. Did you have something that you wanted to say before we wrap up?
Well, the statement you just made, I think what you're identifying is that smoke now and through the rest of this growing season could be widely present. And like you say, because you see it or smell it, I think to add to that, that may not translate into a payable claim. It may not actually test that you have the chemical markers for smoke, or the winery, the resulting wine that's made from it may not be rejected by the winery. But if you see or smell smoke, kind of to get back to what we've sort of presented on, there's no harm in filing a notice of loss. In fact, we would encourage seeing or smelling smoke to go ahead and turn in a notice of loss for smoke. So that way you're at least covered later in the result that there are lab tests that turn up smoke or a winery rejects you for smoke.
Well said. Thank you, Ben. Appreciate that. And I want to thank all of our presenters. This was very helpful, very informative. We have recorded this session, so we will post this session online. We'll send an email out to all of our attendees, so they'll have a link to it. And I know this session will also be posted on the various websites of the organizations participating in the task force. It will take a few days just to edit the video to make sure that it continues to be informative and appealing to watch again. But after that, again, we'll get it posted. So one last time, thank you to our presenters, and we're going to conclude this webinar. And let's hope that the wildfires quickly flame out and we don't have massive smoke events. So thank you and good luck. Bye.